Hello everyone, my name is Saranjeet Singh and we have done a project on the case analysis of Manulife. As Manulife is an insurance company and is one of the top player in the stock market. Next slide. So let me introduce with our group members. So first one is Saranjeet Singh. I will cover the introduction part of the Manulife company and Juliet will cover the phase first and introduction part of the company and Josephine will cover how the data and from where the data acquired and she will also explain about the graphs and Joseph will cover the third phase of the group project and Simranpreet Kaur will cover the fourth phase of the project. Next slide. Okay. So let's start with the brief introduction of the company Manulife. Yeah, we would like to present you our group we would like to present you our project on the company Manulife. Our group has decided to use Manulife company as a company which we will be discussing about the data in their stock price from the period of February 2023 to 2024 and to observe and reflect on the stock market price movement in the market. As we will be also discussing that we use the data from where we observe the data and acquire and process the data. Also, as mentioned above, we will correlate these data to the major events that happened which affect the stock price of Manulife in the specific period. And the main focus of the study of this company is to know about the growth and expand of the company that they have globally expand during the period of February 2023 to February 2024. So our goal is to observe stock price movement on the market and to look for the reasons behind the trend of the stock price. The next part will be explained by Juliet.
Hi everyone, my name is Juliet Chinosonwamade. For our research, I'll be discussing what data were used, how it was acquired, and how the data was processed. So to start with, the data we used is related to Manulife stock volatility and stock price. So we compared the 1 year performance of Manulife between 2023 and February 2024. We observed the volatility of the stock price during this period. We also use the data from February 2023 until February 2024 for this research because we wanted to know the stability of Manulife when it comes to investment. Also, because the latest data provides more accurate information about the company's financial condition. Next slide. So how the data was acquired. We acquired the data from the company's official website under their investment relations page. From the data presented, you can see the different reports about Manulife. The report also provided us with the data from the first quarter of 2023 until the last quarter and its current performance in the first quarter of 2024, which is the exact data we acquired based on the timeline we selected for this research. Next slide, please. It's important to note that when processing data, there are steps that should be taken. So one of the steps we took in processing this data is getting available sources from the company, which is the primary source when processing data. So we also gathered available data about Manulife stock price on the stock market. Another thing we did was in the process, we included the open, the high, the low, and close prices of Manulife's shares. Outside from this, we also collected data that is related to trending volumes, revenues, and news articles that affected the current trend in the stock price. We also examined the figures for possible errors, missing data, and outliners. After that, we decided to create graphs for more accurate presentations about the data that we gathered for this research. At this point, let me call on my peer Josephine to further discuss on our projects. Thank you.
Hello, everyone. My name is Josephine Ngozi Nwamunwosu, and I will be taking you through how Manulife's visualization were constructed. First of all, we created the visual representation with the help of Excel by using line graph, histogram, and box plot. In the line graph, we visualize the decrease and the increase of Manulife stock performance and especially its volatility. For histogram, it represents the representation gave a better view of the relationship between between the decrease and the increase in the price of the stock and the price variation. However, on the box plot, that has more accurate information when it comes to the study of the trend related to the stability and the stock price of the company. Next slide, please. Yeah, in the next 3 slides, we are going to talk about how we achieved the graphs. For the line chart, we arrange the data. We arrange the data in one column and the corresponding stock in the other column. We selected the data range, clicked on the insert tab, then clicked on the line chart. A cell generated the line chart, which shows the trend of the stock price over time. Next slide. For the histogram, we also arrange the same way the data in one column and corresponding stock in another column. We selected the data range, clicked on the insert tab, selected histogram, a cell-generated histogram showing the distribution of the stock price. Next. Lastly, on the scatter plot, we also arranged the same procedure was followed. We arranged the data the data with the date on one column and corresponding stock on corresponding stock price on another column. We selected the data range, then went straight to the insert tab, clicked on scatter. Excel generated the scatter plot showing the relationship between the stock prices. Next. In this slide, we will look at why, in this slide, we will look at the major events that took place during this period. Yes, we observed a significant decrease in its volatility in August 2023, which means the stock price became stable in the third quarter of 2023. At this stage, it gained more potential returns during this period. And also, we observed the lower the volatility. The investor became more confident in the investor in the company, which led to more trading in the company. Next slide, please. In this slide, we will share why and when this occurred. It is important to understand that why and when this event occurred. The occurrence happened between the selected period during our research, which is during between 2023 February and 2024 February. Firstly, we observed that Manulife focused on its global expansion. Secondly, their shares dropped by 5.4% in the third quarter of 2023. According to our stock our stock, our source, Yahoo Finance, the trend affected their volatility level, which led to downward effect in 2023. Next slide, please. In addition, furthermore, Manulife global expansion introduced operational risk, regulatory compliance requirements, supply chain disruption, and uncertainties that led to elevated stock volatility, while currency fluctuations due to their impact on the revenue and earning converted to reporting currency. Next slide. In conclusion, we could say that Manulife expansion, together with the recent pandemic, has significantly affected the stock price in the market, which could impact positively or negatively on their investors. Thank you. I will call on my teammate Joseph to continue from there.
Thank you, Josephine. So now from phase one, we will now move on to phase two of the study, and it talks about statistical comparison of the performance indexes. So uh, just to give a brief background of the study, in this phase two, we now gather data to represent S&P 500 and Dow Jones indexes. So the figures will highlight the performance and growth of S&P and Dow Jones Global Index over their respective periods. So just to give a brief idea what S&P 500 and Dow Jones is. So S&P 500 is representing the US stock market, while the Dow Jones Global Index provides a more global perspective. So next slide. So the requirements to analyze stock market indices. So it is important that when we are analyzing stock market indices, we have a multifaceted approach, a blending quantitative analysis, qualitative insights, and market intuition. So next slide. So how the data will be used. So in this phase of the project, phase two, we will now compare the data that we've gathered in Manulife to two other indexes, which is S&P 500 and Dow Jones when it comes to the trend of stock price movement with Manulife. And from there, we will check if the differences in the mean volatilities and returns of the two indexes are statistically significant or not. So next slide. So, but before that, we need to look for the major events that occurred in the market. So, first thing is the coronavirus, which has still an impact to the stock performance of S&P 500. So, the index began to drop in early 2022 and continued to fluctuate throughout the year into 2023. So, as if you can see, this implies that the pandemic has a real impact to the recession, and until now it has not the company or the stock has not yet recovered from then. So also inflation has caused many investors to pull out of their investments. So next slide. As we can see here, the graph shows that between February 2023 to 2024, the volatility of the stock price is quite on a uniform rate. But when you look at the middle, somewhere in between, it's between the August or quarter three of 2023. It has the greatest impact from that period, because that is when uh Manulife, for instance, has expanded globally, and in their expansion, there's a risk involved, like operational risks, like as mentioned by my team member, the currency fluctuation also takes part on the uh, as a factor in the fluctuation of stock price, particularly of Manulife. So next slide. So how does this major events reflected in the behavior of S&P 500 and Dow Jones? So when it comes to Dow Jones, they had 3 consecutive days of losses last January 2023, which is lower than the previous year. So it's quite a good indicator on their part. But as for S&P 500, they ended 0.6% lower last January. So it's quite lower compared to Dow Jones. So later we will focus on what does this figure has an impact on the two indexes. So whether it has a huge impact or not. So but moving on to the next slide, we can see that the S&P Dow Jones indexes, it's comparing the two indexes, we can see that there's no much difference between the two. Uh, and based on this graph, on this line graph, from 2023 to 2024, it is almost the same, but the biggest gap between the two is uh, those figures that are approaching towards the end of the year. So it's based on the Yahoo Finance data that we've gathered. And we can see that the trend is like it's increasing. The gap is increasing as the year approaches towards the end of the quarter. So one of the factors is because of the inflation as well, and also the impact of pandemic is still has an effect on this figure. So next slide, which exhibited higher returns. So we will now move on to the formula for us to come up with a conclusion which has uh, uh, exhibited higher returns. So for S&P 500 and Dow Jones Global Indexes, S&P has exhibited a higher return with 26.83 compared to Dow Jones with just 20.15. Between the two, S&P 500 has a higher return, but when you include Manulife, Manulife has the highest return between the three. So it has 26.94, which is 0.11% more than S&P 500. And this can be attributed to the global expansion program of Manulife. So next slide. So which exhibit higher volatility between S&P 500 and Dow Jones Global Index. So these figures shows the volatility percentage or the fluctuation rate of both indexes, S&P 500 and Dow Jones Global Indexes. So next slide is uh, how do we come up with this? So we gather the mean return and the standard deviation of the two indexes. So how do we do this? We use Excel to help us navigate the figures and for us to be guided on coming up with a conclusion on which has exhibited higher returns between the two. So next slide is we use the t-test in order for us to determine whether the difference in the mean returns of the two variables, the S&P and the Dow Jones, has as statistically significant on our chosen level. So how do we do this? So to calculate the difference in return, so we were able to compare the absolute value of the t-statistic through the help of Excel, and if the value of the t statistic is greater than the critical t value, then we will reject the null hypothesis. Otherwise, uh, we will accept the null hypothesis, which means that the difference is not statistically significant. In this case, absolute t statistic is less than the critical value. Therefore, we need to reject the null hypothesis. And when we say reject the null hypothesis, it means that the difference in mean returns between the S&P and Dow Jones is not statistically significant. So next slide. In case of Manulife, however, it is different because the absolute value of the t statistic is much larger than the critical t value. Therefore, it's safe to say that the exhibited returns are statistically significant, unlike the case in S&P and Dow Jones. So we also calculate whether the difference in volatilities are statistically significant. So in this case, we gather the mean volatility and standard deviation between the two indexes. And from then we will be able to conclude whether we will reject or accept the null hypothesis. Next slide. And from this, we failed to reject the null hypothesis because the absolute value of the t statistic is less than the critical t value. Therefore, we conclude that the difference in volatilities between the two indexes are not statistically significant at the chosen significant level. Next slide, please. So in the case of Manulife, the difference in mean volatility is significant. Again, it is different when you include Manulife in the picture because the absolute value will be different and the T statistic this time is much larger than the critical T value. So in this case, the exhibited volatility is statistically significant. Next slide. So now we will move on to the next phase of the report of our study and I will hand you over to Simranpreet.
Thank you, Joseph. Let's start with the phase 3 time series and linear regression. This method, in this phase, we are going to make a forecast or the prediction related to the stock price movement and volatility of all the three indexes, all the two indexes and the company S&P, Dow Jones, and the Manulife. So, which method was used for the forecasting? The linear regression analysis. This is a statistical method which is used to model the relationship between the dependent variable and one or more independent variables. So, what are dependent and independent variables? The dependent variable is that variable which we want to predict. For example, we have the data related to data about 4 months and we need to find the forecasting for the fifth month. That fifth month is the dependent variable on the first 4 months. So the one which we are going to predict is the dependent variable, and one those which we are already known are the independent ones. So how is the linear regression applied? Firstly, we gathered the data for the each index and the company from the for the several months, which were from February 2023 to February 2024. After we have the data, we use the statistical software such as Python or R, and a linear regression model was fitted to this data. The regression model was estimated the coefficient for each independent variable. Now we have coefficient of each independent variable for February 2023, March, April, May, June, everything, and it generate a linear equation representing the relationship between these variables. That equation will be used for the prediction of the next month. This equation is used to predict the future values based on the given historical data. So you can see from this data that this is the original data which we have for the two indexes and the company. For Dow Jones, there was the linear regression formula is clear over there. Y is equal to 0.776x plus 99.639, which is different for all of these. This value of y is something which is dependent variable and x is independent variable, and we are going to find the next values of y using the previous values of both y and x, which can be done easily using the Python or R. Once we have predicted it, there is the clear prediction. The prediction starts from between 10 and 12. For the Dow Jones, it can be clearly seen that in the beginning there are some lower, then higher, lower, higher. It is kind of a zigzag movement which will look really small from this point, but it is quite big in the real world. In case of S&P, it is the most stable one, as it was shown in the previous slides by my teammate Joseph, that S&P was the most stable one in case of market, and in the future, according to the prediction, it is going to remain the most stable one. In case of Manulife, there is a great fluctuation because at the point 11 it is at the highest, then it is going to drop, then it is going to start a little linear with minor upgrowth. So the result for the forecast are different for all these, which I have already explained in the previous slide, and these can be used to uh, predict the overall company's performance in the upcoming months. So how does this new predicted data agree with the actual historical data? The first of all, the historical data will be compared with the actual historical data to evaluate their accuracy and reliability, which can be done by separating the yearly time, which will be done in the form of quarters. Second quarter of 2023, third quarter, fourth quarter, and the beginning of the 2024, with the second quarter of the 2024, which is the predicted data. For these forecasted values, generally aligned with the historical trends, there were some disparities observed, particularly during the period of market volatility or unexpected events. However, this overall looking, the forecasted values provided a valuable insight into the potential future performance of each index and the company also. So the correlation will be done with the help of p values, which will p test, which will be done exactly in the similar way as the t test, which were already shown by my teammate Joseph. So back to that back to the showing of the relation to the historical data, to show the correlation between the historical data and the new data. So you can look at clearly at the screen that the first graph is for the Dow Jones, second graph is for the S&P, and the last graph is for Manulife. When looked at the Dow Jones, previously there has been a lot of fluctuation, but for this future prediction there are less fluctuation, so there can be a doubt about that. When it comes to S&P, there was a continuous growth with minor fluctuation, which can be more reliable one because of its performance, because of its continuous growth. When it comes to Manulife, the prediction can be really good in knowing what the upcoming performance would be of the company. So what is the statistical significance of this correlation? This was assessed using the statistical tests such as p-value, just like the t-test. A low p-value indicates that the observed correlation are statistically significant, which means that they are unlikely to occur by any chance alone. This assessment helped to determine the reliability of the relationship identified through the correlation analysis. So once all the reliability has been checked, what is the conclusion? First of all, these forecasting method and correlation analysis used in this project provide the valuable insights into the potential future trends, what could happen in the market or relationship between S&P and Dow Jones. And why is this important to know these relations or the trends of the market? This is because with the once the person know about the daily returns of these highlights, the managers of the company can decide what they need to do for the company to go upward. And another important thing is that once the predictions are done, the company should not completely depend on these predictions, because there are some limitations to them. Sometimes there can be some market situation, like there can be inflation or some other reasons, there can be reduction in the labor market. Anything can happen which can change the original trend and cause more fluctuation. So it is important for company to not completely rely on these results, but these forecasted values are very useful in prediction in aid of the decision making process. Thank you so much, and this is the end of our presentation. Thank you.